Hey guys, it is Julie here with JT.Wealth. In today's video, we are looking at 3 growth stocks that were recently picked up by one Billionaire's fund. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are taking a look at 3 growth stocks that were recently picked up by billionaire Ray Dalio and are all rated as strong buys. We all love knowing what people with more money than us are doing with that money, so we are going to give you a quick background on Ray Dalio and then take a look at all 3 of these companies and their stocks. And just before we do that, this is your friendly reminder that if you enjoy today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. If you enjoy free stocks, make sure to check out some of the links in our description too. Right now, Webull is giving away 4 free stocks for signing up and funding a new investment account, so check them out. Okay, so who is Ray Dalio and why do we care what stocks his company is buying? Ray is the founder, co-chairman, and co-chief investment officer of Bridgewater Associates. He started Bridgewater out of his 2-bedroom apartment in New York in 1975, and under his leadership, the firm has grown into the 5th most important private company in the US, according to Fortune magazine. For his and Bridgewater's industry-changing innovations, as well as his work advising policymakers around the world, Ray has been called the Steve Jobs of investing. Now, Dalio's advice for investing during the pandemic can be summed up easily enough. First, he says to diversify the portfolio. Diversification means spreading out the risk, which in turn will reduce your losses should one or even several investments turn south. Second, Dalio tells us not to bother trying to time the market. Even the pros don't usually get this right, and Dalio says that simply buying into a stock you like and holding it long term is a better strategy than trying to buy in at the right time. The stock market is a risky place to put your money, and Dalio understands that. His tactics for mitigating that risk are age-old and have arguably brought him great success. So on that note, we're taking a look at 3 stocks that Dalio's company, Bridgewater, picked up during Q3. Number 1 on our list today is Baxter International. Baxter International trades under the ticker BAX, currently at $77.77 per share, and they do also pay a quarterly dividend. Baxter International produces medical devices and other products for the treatment of acute and chronic conditions, particularly blood, immune, and kidney diseases. The company markets mainly to healthcare professionals and institutions rather than the open market and boasts over $11 billion in annual revenue. The company's revenues through 2020 have been stable and in line with historical values. Baxter ended 2019 with a $3 billion quarter that slipped to $2.72 billion in Q1 of 2020, but had risen steadily to $2.97 by Q3. The company pays out a modest dividend for investors, which at 24.5 cents per common share gives a yield of 1.3%. Now, Bridgewater's position in Baxter is a new one, and the firm purchased up just shy of 125,000 shares, which is currently worth about $9.73 million. 5-star analyst Danielle Antalfi of SVB Leerink writes of Baxter, "We see Bax's underlying fundamentals, accelerating sales growth and meaningful margin expansion as unchanged. One of the most meaningful data points in this quarter was 6% peritoneal dialysis patient growth, well ahead of the mid-single-digit long-term growth outlook for the renal business that the Street is modeling. As the pandemic pressures begin to lift, visibility into the long-term growth drivers should improve, and we would expect the shares to move meaningfully higher." In line with her bullish comments, Antalfi rates Bax shares an outperform, and her $105 price target implies about a 34% one-year potential upside. There are 12 analysts who have current ratings on Baxter International stock, and it comes in as a strong buy based on 11 buys and 1 hold. Their average price target is $95 per share, which represents just over a 22% potential upside. Second on our list is a fairly well-known company, and that is CVS. They trade under the ticker CVS and are currently at $73.38 per share, and they also pay a quarterly dividend. Now, of course, CVS is a healthcare company that is aimed squarely at the consumer healthcare market. The company is best known as the CVS pharmacy chain and is a staple of the retail scene. CVS stores offer a range of home healthcare and hygiene products, along with basic groceries, pharmacy services, and some more specialized prescription medical equipment. The company has brought in more than $130 billion in annual revenues for the past 3 years. CVS's revenues showed a slight dip this year during Q2 when economic conditions deteriorated, but they did quickly rebound. The sequence of quarterly earnings in 2020 was 66.7, 65.3, and 67.1 billion, showing a steady sales base, which is to be expected from a retailer dealing in products mainly deemed as essential during these pandemic shutdowns. Their Q3 earnings per share came in at $1.66, which was well ahead of consensus expectations of $1.33. Now, Dalio's Bridgewater bought 320,000 shares of CVS stock last quarter, expanding a test position that the firm already held. So the buy boosted their total holdings dramatically to about 333,000 shares, which are now worth about $24.87 million. Deutsche Bank analyst George Hill notes that CVS looks set for a peaceful transition of power when their current CEO, Larry Merlo, steps down next year. While we believe Ms. Lynch will likely consider executing upon CVS's vertically integrated care delivery strategy, we do expect her to take a fresh look at the business and have little fear of exploring new directions. We believe Mr. Merlo's legacy will be having the courage to try to reshape and better utilize the struggling retail pharmacy with the Aetna deal. Now, with the introduction of Amazon Pharmacy, it certainly poses a lot more competition in the pharmacy realm. So having new management that can come in and take a fresh look could be very well timed for CVS. George Hill concluded that CVS is in the early innings on delivering against its vision of a vertically integrated healthcare services company with outsized consumer engagement. To this end, Hill rates CVS shares as a buy and gives them a $101 price target, indicating his confidence in 35% growth potential over the next months. There are 9 analysts altogether that have a current rating on CVS's stock, and it comes in as a strong buy with 7 buy ratings and 2 holds. The average price target is $83.29 per share, representing about 13.5% potential upside. Now, for our third stock on the list today, we are moving from healthcare over to the food industry with Darling Ingredients. They trade under the ticker DAR and are currently at $49.11 per share. Darling Ingredients recycles the waste products of the restaurant industry and the animal processing industry, namely oils, fats, and grease, and manufactures usable meat and bone meals, yellow grease, and tallow. The company's products are then used in pet foods, animal feeds, bioenergy, and fertilizers. Darling has delivered strong performance through 2020. The company's quarterly earnings have held between $848 to $852 million during the pandemic, while earnings have been shown year-over-year gains in each quarter. The Q3 results included 61 cents earnings per share on $850 million in the top line revenues. DAR stock has been steadily rising since last winter's market crash and is up 77% year to date. This is another new holding for Dalio and Bridgewater. During Q3, the fund pulled the trigger on just shy of 70,000 shares for a small position worth about $3.46 million. Covering the stock for Wolfe Research, 5-star analyst Sam Margolin is impressed by Darling's combination of cutting-edge renewable fuels and mature feed segments. We rate DAR outperform because of its rapid growth in the renewable diesel segment, supported by its feedstock manufacturing advantage sourced largely from the base business. DAR's other segments are food and feed ingredients, which are relatively mature compared to fuels. We do not expect material growth in food and feed. We note that margins in the segment have been remarkably steady over the years. So these comments support his outperform rating and his $67 price target, implying about a 34% upside growth next year. Overall, there are 6 analysts with ratings on Darling Ingredients stock, and it comes in as a strong buy with 5 buy ratings and 1 hold. Their average price target is $58.83, which is just shy of a 20% potential upside. So there we have 3 different growth companies as highlighted by tip ranks. Personally, I think CVS is in a really unique position here, especially as we near these vaccine approvals. I'm sure they will certainly play a role in the distribution of that. Now, with Darling Ingredients, that's not an industry I'm as familiar with, but with the shift towards green power, I think their renewable fuels is certainly going to be an interesting opportunity for their company. Now, you guys know I always love hearing from you, so please let me know your thoughts on these 3 companies in the comments section down below and any other growth stocks that are catching your eye lately. If you made it all the way to the end of the video here, you better give us a big thumbs up and make sure that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.